Hello YouTube friends. I am your host, Ali. Hope you are all doing well. In this video, you will be enlightenment about cryptocurrency, what it is and how it works. Contents of video. What is cryptocurrency? How to choose a cryptocurrency. Pros and cons of cryptocurrency. Your decision, is cryptocurrency a good investment? Cryptocurrency legal and tax issues. What is cryptocurrency? A cryptocurrency or crypto is a digital asset that can circulate without the need for a central monetary authority such as a government or bank. Instead, cryptocurrencies are created using cryptographic techniques that enable people to buy, sell or trade them securely. How does cryptocurrency work? Bitcoin and most other cryptocurrencies are supported by a technology known as blockchain, which maintains a tamper-resistant record of transactions and keeps track of who owns what. The creation of blockchains addressed a problem faced by previous efforts to create purely digital currencies, preventing people from making copies of their holdings and attempting to spend it twice. Individual units of cryptocurrencies can be referred to as coins or tokens, depending on how they are used. Some are intended to be units of exchange for goods and services, others are stores of value, and some can be used to participate in specific software programs such as games and financial products. How are cryptocurrencies created? One common way cryptocurrencies are created is through a process known as mining, which is used by Bitcoin. Mining can be an energy-intensive process in which computers solve complex puzzles in order to verify the authenticity of transactions on the network. As a reward, the owners of those computers can receive newly created cryptocurrency. Other cryptocurrencies use different methods to create and distribute tokens, and many have a significantly lighter environmental impact. How to choose a cryptocurrency. It's important to remember that Bitcoin is different from cryptocurrency in general. While Bitcoin is the first and most valuable cryptocurrency, the market is large. Nearly 20,000 different cryptocurrencies are traded publicly, according to CoinMarketCap.com, a market research website. And cryptocurrencies continue to proliferate. The total value of all cryptocurrencies on the 13th of June, 2022, was about $970 million, having fallen substantially from an all-time high above $2.9 trillion late in 2021. While some of these have total market valuations in the hundreds of billions of dollars, others are obscure and essentially worthless. If you're thinking about getting into cryptocurrency, it can be helpful to start with one that is commonly traded and relatively well established in the market, though that's no guarantee of success in such a volatile space. NerdWallet has created guides to some widely circulated cryptocurrencies, including Bitcoin and some altcoins, or Bitcoin alternatives. Bitcoin is the first and most valuable cryptocurrency. Ethereum is commonly used to carry out financial transactions more complex than those supported by Bitcoin. Cardano is a competitor to Ethereum led by one of its co-founders. Litecoin is an adaptation of Bitcoin intended to make payments easier. Solana is another competitor to Ethereum that emphasizes speed and cost-effectiveness. Dogecoin began as a joke but has grown to be among the most valuable cryptocurrencies. Shiba Inu is another dog-themed token with more complex mechanics. Stablecoins are a class of cryptocurrencies whose values are designed to stay stable relative to real-world assets such as the dollar. Are NFTs cryptocurrencies? NFTs, or non-fungible tokens, are digital assets that convey ownership of what could be considered an original copy of a digital file. They share many similarities with cryptocurrencies, and they can be bought and sold in many of the same marketplaces. However, NFTs are different from cryptocurrencies due to that unwieldy word in their name, non-fungible. Cryptocurrencies are fungible, So any unit of a specific cryptocurrency is basically the same as any other. My 1 Bitcoin has the same value as your 1 Bitcoin. Pros and cons of cryptocurrency. Cryptocurrency inspires passionate opinions across the spectrum of investors. Here are a few reasons that some people believe it is a transformational technology, while others worry it's a fad. Cryptocurrency pros. Supporters see cryptocurrencies such as Bitcoin as the currency of the future and are racing to buy them now, presumably before they've become more valuable. Some supporters like the fact that cryptocurrency removes central banks from managing the money supply, since over time these banks tend to reduce the value of money via inflation. In communities that have been underserved by the traditional financial system, some people see cryptocurrencies as a promising foothold. Pew Research Center data from 2021 found that Asian, Black and Hispanic people are more likely than white adults to say they have ever invested in, traded or used a cryptocurrency. Other advocates like the blockchain technology behind cryptocurrencies, because it's a decentralized processing and recording system and can be more secure than traditional payment systems. Some speculators like cryptocurrencies because they're going up in value and have no interest in the currency's long-term acceptance as a way to move money. Some cryptocurrencies offer their owners the opportunity to earn passive income through a process called staking. Crypto staking involves using your cryptocurrencies to help verify transactions on a blockchain protocol. Though staking has its risks, it can allow you to grow your crypto holdings without buying more. Cryptocurrency cons. Many cryptocurrency projects are untested, and blockchain technology in general has yet to gain wide adoption. If the underlying idea behind cryptocurrency does not reach its potential, long-term investors may never see the returns they hoped for. For shorter-term crypto investors, there are other risks. Its prices tend to change rapidly, and while that means that many people have made money quickly by buying in at the right time, many others have lost money by doing so just before a crypto crash. Those wild shifts in value may also cut against the basic ideas behind the projects that cryptocurrencies were created to support. For example, people may be less likely to use Bitcoin as a payment system if they are not sure what it will be worth the next day. The environmental impact of Bitcoin and other projects that use similar mining protocols is significant. A comparison by the University of Cambridge, for instance, said worldwide Bitcoin mining consumes more than twice as much power as all US residential lighting. Some cryptocurrencies use different technology that demands less energy. Governments around the world have not yet fully reckoned with how to handle cryptocurrency, so regulatory changes and crackdowns have the potential to affect the market in unpredictable ways. Your decision: is cryptocurrency a good investment? Cryptocurrency is a relatively risky investment, no matter which way you slice it. Generally speaking, high-risk investments should make up a small part of your overall portfolio. One common guideline is no more than 10%. You may want to look first to shore up your retirement savings, pay off debt, or invest in less volatile funds made up of stocks and bonds. There are other ways to manage risk within your crypto portfolio, such as by diversifying the range of cryptocurrencies that you buy. Crypto assets may rise and fall at different rates, and over different time periods, so by investing in several different products you can insulate yourself, to some degree, from losses in one of your holdings. Perhaps the most important thing when investing in anything is to do your homework. This is particularly important when it comes to cryptocurrencies, which are often linked to a specific technological product that is being developed or rolled out. When you buy a stock, it is linked to a company that is subject to well-defined financial reporting requirements, which can give you a sense of its prospects. Cryptocurrencies, on the other hand, are more loosely regulated in the US, so discerning which projects are viable can be even more challenging. If you have a financial advisor who is familiar with cryptocurrency, it may be worth asking for input. For beginning investors, it can also be worthwhile to examine how widely a cryptocurrency is being used. Most reputable crypto projects have publicly available metrics showing data such as how many transactions are being carried out on their platforms. If use of a cryptocurrency is growing, that may be a sign that it is establishing itself in the market. Cryptocurrencies also generally make white papers available to explain how they'll work and how they intend to distribute tokens. If you're looking to invest in less established crypto products, here are some additional questions to consider. Who's heading the project? An identifiable and well-known leader is a positive sign. Are there other major investors who are investing in it? It's a good sign if other well-known investors want a piece of the currency. Will you own a portion in the company or just currency or tokens? This distinction is important. Being a part owner means you get to participate in its earnings. You're an owner, while buying tokens simply means you're entitled to use them, like chips in a casino. Is the currency already developed, or is the company looking to raise money to develop it? The further along the product, the less risky it is. It can take a lot of work to comb through a prospectus. The more detail it has, the better your chances it's legitimate. But even legitimacy doesn't mean the currency will succeed. That's an entirely separate question, and that requires a lot of market savvy. Be sure to consider how to protect yourself from fraudsters who see cryptocurrencies as an opportunity to bilk investors. Cryptocurrency legal and tax issues. There's no question that cryptocurrencies are legal in the US, though China has essentially banned their use, and ultimately whether they're legal depends on each individual country. The question of whether cryptocurrencies are legally allowed, however, is only one part of the legal question. Other things to consider include how crypto is taxed and what you can buy with cryptocurrency. Legal tender, you might call them cryptocurrencies, but they differ from traditional currencies in one important way. There's no requirement in most places that they be accepted as legal tender. The US dollar, by contrast, must be accepted for all debts, public and private. Countries around the world are taking various approaches to cryptocurrency. El Salvador in 2021 became the first country to adopt Bitcoin as legal tender. Meanwhile, China is developing its own digital currency. For now, in the US, what you can buy with cryptocurrency depends on the preferences of the seller. Crypto taxes, again, the term currency is a bit of a red herring when it comes to taxes in the US. Cryptocurrencies are taxed as property, rather than currency. That means that when you sell them, you'll pay tax on the capital gains, or the difference between the price of the purchase and sale. And if you're given crypto as payment, or as a reward for an activity such as mining, you'll be taxed on the value at the time you received them. This is the first part of video. Now move on the next part of video. Stay connected. This is the second part of video. In this part, we will enlightenment about how to buy cryptocurrency. If you're new to the world of crypto, figuring out how to buy Bitcoin, Dogecoin, Ethereum and other cryptocurrencies can be confusing at first. Thankfully, it's pretty simple to learn the ropes. You can start investing in cryptocurrency by following these 5 easy steps. 1. Choose a broker or crypto exchange to buy cryptocurrency. First, you need to pick a broker or a crypto exchange. While either lets you buy crypto, there are a few key differences between them to keep in mind. What is a cryptocurrency exchange? A cryptocurrency exchange is a platform where buyers and sellers meet to trade cryptocurrencies. Exchanges often have relatively low fees, but they tend to have more complex interfaces with multiple trade types and advanced performance charts, all of which can make them intimidating for new crypto investors. Some of the most well-known cryptocurrency exchanges are Coinbase, Gemini and Binance US. While these companies' standard trading interfaces may overwhelm beginners, particularly those without a background trading stocks, they also offer user-friendly, easy purchase options. The convenience comes at a cost, however, as the beginner-friendly options charge substantially more than it would cost to buy the same crypto via each platform's standard trading interface. To save on costs, you might aim to learn enough to utilize the standard trading platforms before you make your first crypto purchase, or not long after. An important note: as someone new to crypto, you'll want to make sure your exchange or brokerage of choice allows fiat currency transfers and purchases made with US dollars. Some exchanges only allow you to buy crypto using another crypto, meaning you'd have to find another exchange to buy the tokens your preferred exchange accepts before you could begin trading crypto on that platform. What is a cryptocurrency broker? Cryptocurrency brokers take the complexity out of purchasing crypto, offering easy-to-use interfaces that interact with exchanges for you. Some charge higher fees than exchanges. Others claim to be free while making money by selling information about what you and other traders are buying and selling to large brokerages or funds, or not executing your trade at the best possible market price. Robinhood and SoFi are two of the most well-known crypto brokers. While they are undeniably convenient, you have to be careful with brokers because you may face restrictions on moving your cryptocurrency holdings off the platform. At Robinhood and SoFi, for instance, you cannot transfer your crypto holdings out of your account. This may not seem like a huge deal, but advanced crypto investors prefer to hold their coins in crypto wallets for extra security. Some even choose hardware crypto wallets that are not connected to the internet for even more security too. Create and verify your account once you decide on a cryptocurrency broker or exchange. You can sign up to open an account. Depending on the platform and the amount you plan to buy, you may have to verify your identity. This is an essential step to prevent fraud and meet federal regulatory requirements. You may not be able to buy or sell cryptocurrency until you complete the verification process. The platform may ask you to submit a copy of your driver's license or passport, and you may even be asked to upload a selfie to prove your appearance matches the documents you submit. 3. Deposit cash to invest. To buy crypto, you'll need to make sure you have funds in your account. You might deposit money into your crypto account by linking your bank account, authorizing a wire transfer, or even making a payment with a debit or credit card. Depending on the exchange or broker and your funding method, you may have to wait a few days before you can use the money you deposit to buy cryptocurrency. Here's one big buyer beware. While some exchanges or brokers allow you to deposit money from a credit card, doing so is extremely risky and expensive. Credit card companies process cryptocurrency purchases with credit cards as cash advances. This means they're subject to higher interest rates than regular purchases. And you'll also have to pay additional cash advance fees. For example, you may have to pay 5% of the transaction amount when you make a cash advance. This is on top of any fees that your crypto exchange or brokerage may charge. These can run up to 5% themselves, meaning you might lose 10% of your crypto purchase to fees. 4. Place your cryptocurrency order. Once there is money in your account, you're ready to place your first cryptocurrency order. There are hundreds of cryptocurrencies to choose from, ranging from well-known names like Bitcoin and Ethereum to more obscure cryptos like Theta, Fuel or Holo. When you decide on which cryptocurrency to purchase, you can enter its ticker symbol, Bitcoin, for instance as BTC, and how many coins you'd like to purchase. With most exchanges and brokers, you can purchase fractional shares of cryptocurrency, allowing you to buy a sliver of high-priced tokens like Bitcoin or Ethereum that otherwise take thousands to own. The symbols for the 10 biggest cryptocurrencies based on market capitalization are as follows: Bitcoin, BTC, Ethereum, ETH, Tether, USDT. Binance Coin, BNB, Cardano, ADA. Dogecoin, Doge. XRP, XRP, USD Coin, USDC, Polkadot, DOT, Uniswap, UNI, based on market capitalization as of the 28th of June, 2021. 5. Select a storage method. Cryptocurrency exchanges are not backed by protections like the Federal Deposit Insurance Corporation, FDIC, and they are at risk of theft or hacking. You could even lose your investment if you forget or lose the codes to access your account. As millions of dollars of Bitcoin already has been. That's why it's so important to have a secure storage place for your cryptocurrencies. As noted above, if you're buying cryptocurrency via a broker, you may have little to no choice in how your cryptocurrency is stored. If you purchase cryptocurrency through an exchange, you have more options. Leave the crypto on the exchange. When you buy cryptocurrency, it's typically stored in a so-called crypto wallet attached to the exchange. If you don't like the provider your exchange partners with, or you want to move it to a more secure location, you might transfer it off of the exchange to a separate hot or cold wallet. Depending on the exchange and the size of your transfer, you may have to pay a small fee to do this. Hot wallets: these are crypto wallets that are stored online and run on internet-connected devices, such as tablets, computers or phones. Hot wallets are convenient, but there's a higher risk of theft since they're still connected to the internet. Cold wallets: cold crypto wallets aren't connected to the internet, making them your most secure option for holding cryptocurrency. They take the form of external devices, like a USB drive or a hard drive. You have to be careful with cold wallets, though. If you lose the key code associated with them or the device breaks or fails, you may never be able to get your cryptocurrency back. While the same could happen with certain hot wallets, some are run by custodians who can help you get back into your account if you get locked out. Alternatives: ways to buy cryptocurrency. While buying cryptocurrency is a major trend right now, it's a volatile and risky investment choice. If investing in crypto on an exchange or via a broker doesn't feel like the right choice for you, here's a few options to indirectly invest in Bitcoin and other cryptocurrencies. 1. Wait for crypto exchange traded funds, ETFs. ETFs are extremely popular investment tools that let you buy exposure to hundreds of individual investments in one fell swoop. This means they provide immediate diversification and are less risky than investing in individual investments. There is a huge appetite for cryptocurrency ETFs, which would allow you to invest in many cryptocurrencies at once. No cryptocurrency ETFs are available for everyday investors quite yet, but there may be some soon. As of June 2021, the U.S. Securities and Exchange Commission, SEC, is reviewing 3 cryptocurrency ETF applications from Cryptcoin, VanEck and WisdomTree 2. Invest in companies connected to cryptocurrency. If you'd rather invest in companies with tangible products or services and that are subject to regulatory oversight, but still want exposure to the cryptocurrency market, you can buy stocks of companies that use or own cryptocurrencies and a blockchain that powers them. You'll need an online brokerage account to buy shares of public companies like NVIDIA. This technology company designs and sells graphics processing units, which are at the heart of the systems used to mine cryptocurrency. PayPal already a popular choice for people buying items online or transferring money to family and friends. This payments platform recently expanded to allow customers to buy and sell select cryptocurrencies with their PayPal and Venmo accounts. Square, This payment services provider for small businesses has purchased over $220 million in Bitcoin since October 2020. In February 2021, the firm disclosed that Bitcoin made up around 5% of the cash on its balance sheet. In addition, Square's Cash App allows people to buy, sell and store cryptocurrency. As with any investment, make sure you consider your investment goals and current financial situation before investing in cryptocurrency or individual companies that have a heavy stake in it. Cryptocurrency can be extremely volatile, a single tweet can make its price plummet, and it's still a very speculative investment. This means you should invest carefully and with caution. Hope this video will informative for you. Thank you very much.